Welcome back. The market has actually come off from the highs quite a bit. The Nifty is now absolutely flat, and the Bank Nifty as well has lost most of its morning gains. On the losing end, you have a lot of companies. City Union Bank, of course, is still down about 5%, but you have a lot of the sugar companies that are under pressure. Fertilizer companies are coming off. NFL is down about 3% Inox Wind, LT Foods, Deepak Fertilizers, a couple of other stocks that are under pressure right now. But Reliance has announced the launch of its FMCG brand Independence. The brand will offer a range of products including edible oils, pulses, grains, packaged foods and several other daily need products. To discuss what this could mean for another player in the space and what this does to the competitive landscape, we're joined by Sanjeev Asthana, the CEO of Patanjali. We'll also be, of course, talking about their business and the way forward. Sanjeev, thanks a lot for joining in, and greetings of the season to you. There is, in any case, a lot of competition in this space currently. And now with such a behemoth entering the space with their new brand, what do you think this would do to the competitive landscape? And how are businesses like yours ready to wade through this competition? Sanjeev, is my voice reaching you?
So thanks for thanks for having me on the show. And so clearly, Reliance is a formidable company. And incidentally, that's one of my erstwhile companies where I've worked as well. And so we respect the competition. We believe, they're going to be a strong player with the kind of retail footprint that they have. And
we can't.
That why this may happen, but we ourselves have a very strong array of products, which is going to be driving this change. And so we are pretty confident that we should be able to not only meet any challenge head on, but we have confidence in our own product portfolio, our own reach, what we have, and the strategy that we have in place.
Hi, Mr. Asthana. Good morning. So, if you could tell us, you must have signaled out some strengths that you have, right, in comparison to Reliance. What are those, and how will you guard your market share?
So, look, we have basically the product range that we have. Reliance's right now entries pretty much in the areas of the grocery segment. Our unique segment, the foods business that we acquired, carries very unique products which are IP'd, where there's a strong brand equity which Patanjali has. Right from things like honey and Chyawanprash and very special juices, herbal juices. Our atta, biscuits, etc. So we are pretty confident that the space is large. We respect Reliance and we respect all of the competition that we have. But I think our growth plans continue afoot. We will continue growing our business 15 to 20%, and that is the plan. And we're pretty confident that the Indian market is supportive. Our strategies are pretty much in place, and 2023 should be a good year for us.
Okay, but this is also a year when there is massive competition, right? Not just from Reliance, but you have other large players like the Adani Group as well entering into this space. At a time when, in any case, margins have been a bit subdued, especially in the edible oil segment, do you think all of this competition could put more pressure on margins? Are you ready for that? And if yes, what could the ballpark range look like for the year?
For the year, while giving a guidance will not be appropriate, but we are pretty confident that we should be pretty much there in terms of what we originally stated. Barring one quarter in the second quarter, which we had this blip because unprecedented events, what the entire world faced in terms of the commodity inflation and then sudden drop in prices. I think we are pretty confident that we should meet the numbers in the rest of the quarters. And our growth plans are pretty much in place, which should be the guiding force in the way this is going to go forward.
Mr. Asthana, good morning. Prashant here. On palm oil, because we saw such a massive rally and then such a sharp fall, will we see any inventory losses for the company in the quarter, in the third quarter?
None at all. In fact, the prices have rallied since we spoke last, and they've more or less covered the entire drop which was there. So we're pretty comfortable on that front. And you will see a significant uptick, both in our margins and the revenue. And we are pretty confident. So that was one-off sort of situation, which is, pretty unprecedented in the history of, the edible oils or the commodities. But I don't expect that we'll see a repeat of that.
Improvement in margins and and overall top line growth, etc. Right? Well, that's what you're talking about.
Yeah, so both top line and bottom line, we should be pretty much there because this year we have a full quarter this month of the food FMCG, the food business, the biscuits business, and all the businesses will be taking together. So I think we should be pretty comfortable.
Last time you were on, we did, and you've been open about saying that rural has been slow, right? Q2 was a little weakish, but you'd said third quarter, fourth quarter, things will pick up. Could you give us an update? Have things picked up to the extent that you expected?
They have. In fact, both the two parts. One was the the harvest of the crops. Second was the marriage season. So the third quarter has been pretty robust. We have to see that how this fourth quarter will roll out. But broadly, if I look at the rural demand, I think from a downturn that we faced, it has started picking up again. And so to that extent, we are pretty okay that we'll see this quarter coming better.
Okay. So you had guided for the food business to see revenues of around 30 to 35,000 crores in the next 5 years and margins at 15 to 20%. 5 years is a long time out, but would you still stick by that guidance and any near-term targets that you'd have?
So the near-term targets are pretty defined. I think we broadly will have some, settlement of the margins to a more regular levels. And which is getting, which will become pretty, the trend line of, around 10 to 15% will be there. And the rest of the business pretty much between 4 and 6% range is what we expect. So pretty much confident on that front.
Final question, Mr. Asthana, before we let you go. The promoter holding is still at around 80% plus, and you need to bring that down. Any timelines? And, how do you plan on doing it? Will it be a fresh issue?
So you'll hear about it very soon. I think it's just a question of, finishing our third quarter, and post that, we'll get started on that. So there's a lot of active interest from the investors, both the existing ones and the new ones, and you will hear that in next couple of weeks' time.
Oh, so early 2023 is what we should hear from it? January first half is...
Absolutely. Absolutely.
Okay.
All right. Thank you very much, Mr. Asthana. Look forward to that, and look forward to speaking with you again soon. Thank you very much for your time here on CNBC-TV18. Now, let's talk about a company which we rarely do talk about. I mean, although we discussed it recently because the stock price move. I'm talking about New India Assurance. If you can, I don't know if you have a quarter-to-date chart. Today, it's not doing very much. But this quarter, starting October till now, and we're almost done with December, it's up 55%. It's by far the single best quarter in terms of stock price performance for New India Assurance. What is really happening, what's really going on? We are now joined by Neerja Kapoor, CMD at New India Assurance, to run us through exactly that. Ma'am, it's a pleasure. Good morning. Great to have you with us here. Thanks very much. We rarely get a chance to speak with you, so all the more welcome. I want to start with what's happening on the business side. Premium growth in the last 2 quarters came down from 15 to 18% levels to now to between 5 and 7%. This is lower than what the industry growth has been, what peers have done. Could you tell us what's happening and what could FY23 growth look like and beyond?
Thank you very much for having me on your show. India is one of the fastest growing economies in the world, having clocked about 5.5% average GDP growth over the past decade. Economic growth in India is estimated to grow at about 6.9% in 22-23. And with a proactive set of administrative actions taken by the government, a flexible monetary policy, softening of the global commodity prices, also the supply chain bottlenecks, we are seeing them moving off. Inflationary pressures have eased to some extent in India. So 3 mega trends, global offshoring, digitalization, and energy transition, are setting the scene for a good economic growth in the country as compared to the rest of the world. India has emerged as the fastest growing major economy in the world. And
right. Ma'am, sorry to interrupt. But what in terms of New India itself, if you can be a little specific in terms of what can we expect, in terms of premium growth, as I pointed out, has slowed down meaningfully. What's your own understanding of how the numbers will progress from here?
So we see a very good growth in the motor segment, and with the new vehicle sales showing a very healthy trend, we see the automobile sales increasing across all categories. And three of our biggest OEM partners, that is Maruti, Hyundai, and Tata Motors, their auto sales are also at an all-time high compared to the previous year. Health business continues to grow at a very healthy pace, and the predominant reason being the pandemic, which has made everyone more aware of life's uncertainties. We are also seeing a lot of push from the IRDA to cover the missing middle, and a lot of action is happening in this scene. Property is also witnessing a much better traction compared to the recent years, and this segment, though had declined in last year, it is now it is driven by the demand from residential and commercial segments. So going forward too, we expect health and motor to be the key growth drivers, and there is a lot of scope for innovative products. And New India as a company is targeting growth without compromising on our bottom line. We are trying to increase our top line, but not at the cost of our bottom line.
Okay, since you're talking about good growth in the motor segment, Ms. Neerja, I wanted your thoughts on two things. One is the deregulating of the motor third-party premium, and the other one is making accident insurance mandatory. Your thoughts here, and how would this really affect, change your growth prospects?
So this will really impact the segment, and we expect to see a huge growth in the motor sector. In fact, we are seeing the motor segment growing at an extremely good pace. Like I mentioned earlier, the automobile sales are increasing, and the deregulation in the sense that all the companies are targeting the dealer business and getting our OEM partners, like I mentioned earlier, Maruti, Hyundai, and Tata Motors, their sales are also at an all-time high. So we expect the segment to grow in a very healthy pace.
Okay, ma'am, two things. One, on the premium growth side, what should we expect over the next, say, year out? Would you get back into the 15% or more kind of zone, premium growth? Yes. Go on.
I would say yes, the industry as such is possibly growing in that segment. We are seeing till November, the growth sales of the entire industry is at about 15%. Like I mentioned, New India, we are focusing on growth with profitability only. So right now, we are focusing on the segment which would be less risk-prone. And so our growth would be, I would estimate it grow in the range of about 10%.
Okay.
8 to 10.
8 to 10%. Okay, this would be lower than industry, but with the focus on profitability and lesser risk. But this is an improvement over what you did last. Q2 combined ratio was at 121 compared to 113 the previous quarter. This had also dropped to 109. Could you tell us, where is this jump coming from, and when can you get back to the 110 kind of levels?
So our combined ratio has shown an improving trend in the last few quarters. Like I mentioned, we are focusing on the profitable lines of business, and we are weeding out these sectors, or we are trying to price the policies at the correct price rather than just focusing on discounts. So the segment that we are, you would see definitely a profitable growth, and so the combined ratio will be coming down in the quarters to come.
Sorry, what will it be, you said? In the quarters to come, what number, ma'am? Sorry, we missed that. Okay, I think
she said that the combined ratio will be coming down, but she didn't give a particular number.
All right.
So.
All right.
That's the word coming in from New India Assurance.
Well, let's try and have the management back, because we had a bunch of other questions. Rarely get to speak with them. Huge underperformers since listing, except, of course, this bounce that we've seen in the quarter so far. We will have her back shortly. The market, by the way, is slipped into the red now. We're down 8 points, 8.5 points. So this is a far cry from where we started. The high was made right at the word go at open. 920 was the high, and the high was 18,459 or so. And from there, 18,459. We've come back quite a bit. 18,381 or so is where the Nifty is now trading at in the red. Let's look at the broader market. If there is actually market breadth, which was very solid, that is also compressed. 1243 stocks are higher, 780 stocks are lower at this point in time. Sonia, sorry.
No, I just want to mention that, a couple of the stocks that we had spoken about in our top 10 segment are doing quite well. So Shyam Metallics, they will be completing, as you know, as Nigel was also telling us, they are completing their third acquisition. They're expanding inorganically and organically, and the street likes that. 9% higher now on Shyam Metallics. Volumes also picking up over there. And a lot of PSU banks doing well, whether it's UCO Bank, IOB. Despite the market sort of being very volatile, some of these banks continue to move forward.
Yeah, no, absolutely. There was an interesting tweet by Uday Kotak, and he's someone who watches global markets carefully. He was a big believer in the power of interest rates. And I just want to kind of quickly read that out while we wait for the management of New India to come back with us. He says, gravity, and I quote, when interest rates are low and central banks are busy printing money, equities can defy gravity. He goes on to say that when money gets tighter, which is through quantitative tightening and deposits give higher rates, gravity comes back. Every risk investor, he says, must be alert to the power of gravity. So that's Uday Kotak. He's been, for the last several months, actually, been highlighting the fact that interest rates in the world are going up. And he's someone who I think has a very keen understanding of how financial markets work as well. So just wanted to kind of put that out. Should we take a quick break while we wait for the management of New India to get back with us? Let's do that. We'll also have, of course, technical trading ideas with what the market has done so far. Mitesh will be back with us. Stay with us. Okay, not looking good because the opening gap has been completely sold into 18,373. I always say what you want is a lower start and then a bid emerging and the market moving higher, not a big gap up which gets sold into. Mitesh is back with us. Mitesh, how do you read the price action so far and any trades?
Prashant, not very good. In fact, in the morning, I was suggesting that, we'll go long only if we get a break above 18,450. We didn't venture about that, but there was no hourly closing happening over there. So I think still wait it out. I'm not very clear on the directional bias of the market, so not trading on the index per se. On the stock side, I think LIC Housing Finance is something which is of interest. That's a buy with a stop below levels of 414, and that's just below yesterday's high. And a target of around 440 can be looked at. And this gold financing companies are doing very well. So Muthoot is a buy as well. Keep a stop below levels of 1,090 for targets of 1145.
Okay, all right. Thanks a lot for that. Well, Axis Bank is one stock that is at a fresh 52-week high right now, and it has other smaller banks. For company, UCO Bank now up almost 9%. But let's do a quick take on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
Sonia, I'm looking at a sector of commodities, and I say this with a bit of a hard take. The commodity derivative markets in India started in 2003, and we are entering into 2023. And the whole way the commodity derivative markets are handled in India, where you continue to see bans and suspensions in many of these agriculture commodities, is exactly what we are looking at right now as well. So what SEBI has done via a circular that came in last night, that they have extended ban in 7 agriculture commodities now till December 2023. The government had banned the 7 agri-commodities in December 2021 for 1 year. So that ban was supposed to be lifted up yesterday. But instead of that, the ban has now been extended to 1 more year there. Well, at that time, it was said that this was being done to control inflation. Remember, government took a lot of measures to ensure that the commodity prices do not surge up too much. Also remember that this is festival season, wedding season, election year coming ahead as well. And this is one thing that the government would want to keep an eye on, is the higher food prices. So what we have on list of the banned market is soybean and soy oil. So all derivatives of soybean there, all derivatives of mustard. Rice, which is non-basmati, also is on the list there. And the other commodities are wheat, gram, moong. All of these commodities continue to be under banned list there. Well, I also want to put on screen on what year have we seen these bans come in. As I said, the commodity derivative market started in 2003. And the first ban in commodity was raw jute, which came in 2005. 2007 was another year that you saw higher food prices. Is the reason rice, wheat, tur, urad, all of these commodities were banned or suspended from trade in derivatives in 2007. And that list just about continued in 2008 as well, where you saw soy oil and chana being added again. And it is in 2021 that you have seen these commodities being banned yet again. After 2008, in a matter of 7 or 8 months, these commodities were brought back, but only to be banned again and again and again. Potato was banned, and it's perishable commodities. It never really came back. And we also are looking at a ban continuing for mustard, soybean, moong, crude palm oil. These were all banned in 2021, was supposed to see come back in the markets in December this year. But now the ban has been extended until 2023 there. Well, the ban, as I said, has been put in because of the inflation concerns there, the food inflation, even as it has come down, but it still continues to be close to that maximum target of 6%, is the reason the government doesn't seem to be taking chances right now with the futures trading there. Also, because India depends on imports of pulses and oilseeds, that's another reason. With the rupee depreciation, you are anyways looking at higher cost of imports. Also, the belief that there is speculation in essential commodities, that is something that the government also wants to keep at bay there. But the impact clearly is not so great because there is no hedging mechanism right now for industry or for farmers for that matter. There is no reference price also available for you to see. What we are looking at is a price that is going across in WhatsApp groups, and there is no way to trade the global volatility in commodities. So various downsides to this really.
Okay, all right. Thanks a lot for that, Manisha. Well, let's talk about a couple of stocks then. Shyam Metallics, they completed an acquisition, actually a rather small one. That's Mittal Corporation Limited. That's basically into stainless steel, wire rod, as well as a bar mill as well. The rationale is ferroalloys is as is being produced by them. They say that this is part of their forward integration because now they'll be consuming it in-house. They're also focusing on diversification, and they're saying that they're looking at their capacity going up from around 8.5 million tons closer to around 15 million tons. Or they've laid out a big capex of close to around 10,000 crores on, most of it which will be funded via internal accruals. So the street has read this positively, but a bigger point is the float in the market is very, very minimal. It's only around, 88% is with the promoter. You have a couple of funds in there as well. So give or take, I think there's only 5 or 6% that's freely available in the market. In the next 20 minutes or so, we'll try to get in the management and we'll get their comment on this acquisition. For the time being, the stock is up close to around 8%. But let's get in Ekta. Well, the diagnostic space is buzzing around. Ekta joins us to run us through, the key details on that front. Ekta, not so good news, but good news for these companies.
Well, let's see. The news is that the health minister is going to hold a review meeting on COVID-19 today. This is, this meeting is taking place amid the rising global cases that we've all been talking about and seeing, especially China. Now, I did speak to a couple of the lab companies, and this time things are really different. They have not seen any kind of significant increase, or rather any kind of increase when it's come to COVID-19 testing. There is absolutely no change in the curve which has taken place. Yes, they, unless there is some kind of severity which comes into COVID-19, unless there is hospitalizations, they don't expect COVID-19 cases or testing to rise significantly. So that's the feedback that I'm getting as of now when it comes to lab companies. So this is probably more of a sentiment push that you're seeing for a lot of these diagnostic companies. Now remember that even if there is a significant rise, there is so much competition which is already common in the diagnostic space that you're not going to see those kind of heady gains that they probably saw at the start of COVID-19 when the testing had begun. There are multiple companies which are doing the same type of testing at this point in time. Now, just to put it into perspective, in the previous quarter, Dr. Lal's COVID-19 revenues had come down 91%. Metropolis down 84% year-on-year. Thyrocare down 97% year-on-year. So from those levels, from that base, don't expect a significant rise. Valuation-wise, significant correction, but still trading at quite a hefty premium.
Okay, Ekta, this is great news when you say that there is no rise in cases, there's no rise in testing either, and we really sincerely hope it stays that way. But there is a health minister meeting to assess the situation, and that happens at 11:30 a.m. today. We'll try and get you more details as the meeting progresses. Let's slip into a quick break. On the other side, our special segment, Outlook 2023. Lata will get chatting with Chetan Iyer of Morgan Stanley to discuss the Asia outlook for the new year. Stay tuned.